So put yourself in this scenario. Imagine you're running a mid-sized business. It's the end of the month. You are completely surrounded by hundreds of bank transactions, a towering stack of faded employee receipts, dozens of supplier invoices, and just this massive, tangled spreadsheet full of raw numbers. And right in the middle of all this chaos, someone asks you the ultimate question: why did our profit drop this month? You know, you really don't need another spreadsheet to answer that. What you need is a radically faster way to untangle all that underlying data.
Part 1. Taming the data influx. Okay, let's dive straight into this. To solve that month-end nightmare, we have to start at the very edge of your financial system. That exact point where raw, messy data first enters the business. Because, quite simply, if you can't tame the data influx right at the source, the rest of your architecture is just going to collapse.
So let's look at a tool called Dext, which essentially acts as this brilliant, intelligent gatekeeper for all those raw inputs. Imagine you're running a construction company, right? Your crews are constantly out in the field. They're buying fuel, they're picking up tools, renting equipment, and at the end of the week, you're handed a mountain of crumpled up receipts. Traditionally, someone literally has to sit there, read every single one, type in the supplier name, double-check the tax, and categorize the expense. It's exhausting. Well, Dext flips this entirely on its head. Through just a simple mobile upload or an email forward, it extracts all the key data, spots duplicates instantly, and pipes the whole shebang straight into your accounting software. It even uses this clever AI assist feature that actually learns from your past bookkeeping decisions to handle the categorization automatically.
And this shift fundamentally changes human value. Instead of spending hours mindlessly typing numbers from a coffee-stained receipt into a terminal, your finance team's role gets a massive upgrade. Suddenly, they can spend their time asking higher-level questions. Things like, is this expense actually valid? Is it within company policy? Is the tax treatment applied correctly? That right there is the exact difference between tedious, manual data entry and true strategic financial control.
Now, once that raw data is digitized and captured, it needs a central nervous system. It flows right into platforms like QuickBooks, which, by the way, is now heavily augmented by Intuit intelligence. Think about a small company trying to process thousands of monthly bank transactions. Intuit Intelligence automatically categorizes those transactions and reconciles the accounts entirely in the background. But it actually goes way beyond just balancing the books. It actively resolves anomalies, flags unusual activity, and generates these custom financial reports on the fly. Which brings us right back to our stressed-out business owner from earlier. Now, instead of manually hunting through dense, complicated ledgers, they can just ask the system in plain English, "What is driving my expenses this month?" Intuit Intelligence instantly generates specific insights based on that real-time, perfectly connected bookkeeping data. For you, that translates into drastically less repetitive bookkeeping and just incredibly fast financial visibility.
Part 2. Controlling spend and strategy. Now, capturing external data like those receipts and bank feeds, that's really only half the battle. Let's shift our investigation to the internal side of the ledger to see exactly how companies are managing the incredible complexities of internal spending.
To manage that internal friction, we're looking at platforms like Ramp. Picture a company with, say, 50 employees. They all have company cards, they travel for conferences, they buy office equipment, they spin up software trials. Every single month, the finance team has to play detective to figure out who spent what, whether it was actually approved, and if it adhered to the corporate travel policy. Well, Ramp uses an AI-first policy agent to automate this entire expense management process. It tracks every transaction as it happens, enforces compliance instantly, and literally flags exactly where the company might be bleeding cash.
And here is where a really fascinating irony is surfacing across the industry right now. AI software subscriptions are absolutely exploding. Your team might be paying for 10 different AI services this very minute. Chatbots, coding copilots, image generators, research platforms. So ironically, the very technology that was meant to drive efficiency and save money has suddenly become a massive new expense category of its own, and finance teams must now actively track, understand, and rein it in. To analyze all this spend, we turn to a tool that almost every business already knows intimately, Microsoft Excel. But let me tell you, this isn't the Excel you grew up with. With Copilot integrated, your familiar old spreadsheet transforms into a fully conversational database. You can literally just ask it questions in normal, everyday language. Copilot will surface the trends, identify weird outliers, generate incredibly complex formulas, and even help build editable financial models, all without you having to manually string together endless, frustrating pivot tables. Let me give you a concrete example of just how powerful this is. Suppose you have a massive data set of sales, expenses, and regional performance. You can literally just type in, calculate profit margin for each product. Boom! Instantly, Copilot does all the heavy lifting. It might reveal that, hey, product A has high sales but a terribly low margin. Product B has lower sales but a massive margin. And product C, it's quietly losing you money every month. You completely bypass hours of manual calculation and instantly surface the patterns that actually drive your business strategy.
Phase 1 of the automation era, the agentic finance workflow. Let's move along and see how all of this builds into something even more revolutionary. We are moving away from passive AI, where you ask a question and get a singular answer, and we're entering the era of active, multi-step AI agents.
Think of it this way. An AI chatbot answers a question, but an AI agent works a process. A finance manager could simply say, review this week's transactions and prepare a list of unusual items. The agentic workflow autonomously executes step 1, collecting the data, moves to step 2, analyzing it for anomalies, step 3, preparing a concise summary, and finally step 4, routing it for human review. Innovative finance teams are already building these systems in production right now, using agentic intelligence to connect accounting logic directly to their day-to-day operational decision-making. But, and this is absolutely crucial, this brings us to a non-negotiable rule of the new finance architecture. Never, ever give an AI agent unlimited financial authority. The goal here isn't to just let AI blindly control the company's money. No way. The goal is to let AI handle the repetitive workflows, while humans retain absolute control over the important financial decisions. Any finance agent must operate within strict, unbreakable boundaries. That means relying on careful permissions, solid approval rules, extensive audit trails, and mandatory human oversight.
Part 3, the human-AI evolution. As we bring this explainer to a close, we really need to look at how all these isolated tools merge into a singular, powerful system architecture, and what that ultimately means for the humans who are operating it.
When you map this whole thing out, it is a beautifully interconnected machine. Data enters at the input layer through Dext, capturing those raw receipts and invoices. That data flows directly into the accounting layer, where QuickBooks and Intuit intelligence are continuously categorizing and reconciling it. Meanwhile, your internal employee spend is being managed by RAMP over at the spend layer. All of this unified financial data is then analyzed in Excel with Copilot at the analysis layer to pinpoint your true margins. And finally, at the automation layer, AI agents step in to connect these steps into tightly controlled, seamless workflows.
So the big question, do accountants disappear in this new architecture? Absolutely not. But the job itself fundamentally evolves. The era of the manual data entry operator, spending hours hunting down crumpled receipts and building repetitive reports, that's coming to an end. Instead, financial professionals are becoming financial decision partners. Because their time is freed up, they can focus on high-level forecasting, deep strategic analysis, risk management, and providing crucial business advice. Their core job shifts from typing in data to validating AI outputs and truly steering the ship.
Now, if you are a business leader trying to navigate this massive shift, here is your playbook. Please, do not go out and try to install all 5 of these platforms tomorrow morning. That is a total recipe for operational disaster. Instead, start with your biggest financial bottleneck. If employee spending is out of control, deploy RAMP. If your data analysis is stuck in the dark ages, upgrade to Excel with Copilot. Deploy just one tool. Measure the time you save, verify the accuracy, and actually prove the business value before you expand the rest of the architecture.
Because the future of accounting isn't humans versus AI. Not at all. The future is humans plus AI plus automation. The businesses that dominate in the coming years won't just be the ones who buy the most software. They'll be the ones who intelligently connect AI to real, tangible business problems, like reconciliation, reporting, and high-level strategic decision-making. So I'll leave you with this final provocative thought to chew on. You know the tools now, but are you automating intelligently?